This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, welcome back to Invest Like a Pro. This is Joe Rabil. I'm going to give you a stock market update as of Thursday's close for Friday morning. I want to run through all the market conditions. I was kind of hoping we had some things falling into place for a pretty good tradable rally, but there's one component that's missing. So let's go ahead and get into that so then we can work our way through the time frames and show you kind of what's taking place in the trend and momentum as well. Okay, so I'm going to get to the disappointing news right away, and that is the sentiment. The sentiment did not change at all. And I was really thinking, just based on the drop that we had been seeing, I knew it might have a little bit of a lag to it. It comes out on Wednesdays, but I just figured there would be a bigger change. And the bulls actually they just dropped by 51 to 50. And this changed from 29 to 26. So it's still flat out neutral for sure. Now, the overbought, oversold oscillator using an RSI 5 weekly is at 18. All right. And I put up the daily one as well. So this is the RSI 5 on the daily, where they're both at 18 right now. All right. I mean, there's no doubt that this is oversold, but we haven't been able to rally from this oversold condition. So I was really hoping that people would get bearish too, and we'd have this oversold, and then we'd have sitting in support and have some real potential. But doesn't look like it wants to play out that way, but maybe next week it could, assuming that this thing stays down here, or maybe wants to dip down a little bit closer to 41 or 4,000 over the course of, say, the next 2 to 3 days. So just something to be on the lookout for. Now, the volatility, if you notice here, the weekly is positive, but I moved it over because you see what's going on here. We've got a pretty good little uptick in the volatility for the first time in a while on the weekly chart. All right. So now it seems like it's really late, but you've got to keep in mind, you want to use these signals on the daily chart to really help with the immediate timing. This is giving us a much better idea of the bigger picture. Remember, where we top out or where we bottom out, these signals tend to be a lot more enduring than what takes place in the daily. But something we want to watch here is to see if this crosses over, because that could lead to some kind of a rally like this, but that would mean that there's more risk to the downside after a rally. So something we definitely want to keep an eye on. So I was really hoping we were going to get to this oversold, deep oversold position and have a whole bunch of bearish people and have ourselves some form of a setup that could, off of this big support zone, that could lead to a rally at least back up towards the 18-week. It doesn't mean we can't do that. It's just the odds aren't quite as good until we get this sentiment number into a little bit more of a bearish mode. The other thing I would suggest to you that I've been looking for is some form of climax, and this has just been a steady, slow drumbeat of a decline. It's not really climatic. And I can see that just simply by looking at the bars. You see the size of these bars? None of these bars, they're all about the same size, right? Now, we had a gap here, but it's not like we're getting any kind of real climatic activity in the form of an enormous red bar, all right? You get a big extended red bar. I think that at this point, if we get that, then you want to be looking for some kind of a reversal to take place, even if it's from a short-term standpoint. All right, I do want to move over to the trends, because there's a couple things that I think are definitely worth discussing. Now, I do suggest going to watch my show today on Stock Charts TV called Stock Talk. I go into the longer term timeframes. I do the yearly and the quarterly, and then I talk about the monthly and the weekly. I also show a specific spider intraday trade that took place that was, definitely worth learning from, because I do a lot of detail on MACD and ADX in there. All right, so let's look at this monthly chart. So we know that what we were looking for is for this to fill in this area between where price was up here back towards the 18-month line. But this is dropping so fast that it's not allowing the 18-month, it's not giving the 18-month enough time to cup around. You see what I mean? Like I'd like this to be rising when this pulls back, and yet in theory, I mean, I think theoretically, if you just did it by the math, I believe it's still declining. I would kind of consider it flat, especially when you have the rising 40 right there. Still a pretty strong support zone right underneath where we are. So we could have a little bit more weakness. We could even slightly break these and come down to the 4,000 mark on the S&P or the 400 mark on the big round number on the spider, and then turn back above by the end of the month. So, you know, you want to be aware of that. I think a lot of people are watching this kind of zone here. So when a lot of times when we're trading loose like that, you can overrun it and then come back above. The other thing I think we need to watch here, now we're getting a little bit of a crisscross. This will not change because it's based on how far of a move we've made below this prior low. So this is not going to shift back. So that's it for the month. The red has crossed above, and that kind of coincides with what I'm seeing right now, which is a lot of damage taking place that is, going to cause, I think, more consolidation at best, and worst, more corrective action. Now, if we cross back above the signal line here on the MACD basis, that would be even more negative, and it would make me believe that it's very possible that this is going to turn into a range-bound environment, not even holding the 4,000 mark. So no dramatic conclusions taking place, but if we can bounce off that 4,100, 4,000 level and turn back up by the end of the month, I think that would be a really good sign. Now, if we go to the weekly, I left this on here because this was the zone that we're talking about. We are now in this zone that I was looking at. The MACD is getting a lot closer to the zero line, and we're getting pretty far away from the 18. So again, what's missing is the tape is terrible. You see the bars are not good. So you don't want to just dive in and say, oh, this is the zone that Joe was talking about. Let me just go ahead and buy. No, we want to go down to the smaller time frames and look for some sign of a turn. Well, if we go to the daily chart, we don't really have that. Look at this bars, and this is not good price action the last couple days. Now, one of the things I mentioned to my subscribers is what we would be looking for is divergence here and divergence here. Now, officially, both of these are potential divergences because this is making a higher low while this is making a lower low. Do you see that? This is making a higher low, and that's making a lower low. This is also not making a higher high yet. Now, DI is back above that prior peak, but the ADX itself is not. Now, the thing is that this is a really strong ADX reading. So it's not really the type of divergence that I would look for some kind of a big move or anything. But based on the MACD, it's possible we could get some kind of a retracement rally. So we still want to be on the lookout for that. Potentially happening next week. We're going to need the market to rally in between here and there, though. So, maybe this tries to attempt a day or two or something like that and then come back down and forms. And maybe at that point, we could have some kind of a divergence that shows a reversal. And then what we're going to want to do is go down to the hourly and look for that reversal. Now, I mentioned on Tuesday how the signals that are taking place here, so this turned it back up and then we turned it back down. We haven't turned it back up. So this is showing these swings on this time frame. And they're helping you with the timing of these swings, right? We're using the shorter term time frame to help us get in when this is ready to rally back up. Now we're getting pretty far away from the 18. So we're setting up a potential, the possibility for some kind of a little rally here back towards that 18, but we don't have any signs here, and the momentum is very strong. Now, we do have a little divergence taking place. Now, I know Amazon is reporting at the close. I think they already have reported. I do believe, based on the news that I'm seeing, that The revenue were above estimates. I'm not sure how the stock is reacting. Actually, it looks like it's up a little bit in the aftermarket. You'll know a lot more when you look at this in the morning on Friday. But I guess the reason why I'm saying that is that that's kind of Apple doesn't report for like a week or something like that. And if we're focusing on earnings right now, Amazon's kind of the only name that could have any kind of an impact on the market that could legitimately maybe cause a little bit of a rally. But we don't want to get all that excited about anything right now when we're below a declining 18 on the hourly, we're below a declining 18 on the daily, we're below a declining 18 on the weekly, and we're sitting above a declining flattish 18 on the monthly. All right. So yes, there's a possibility something could happen here and we could get a tradable rally. I'm not saying we can't trade here. We can't trade up. And it's possible. In fact, with those RSIs both down at 18 right now, it's actually the higher probability. I mean, we could come down a little bit more and then we get some kind of a bounce. But in terms of something meaningful where you could actually make a little bit of money, I think this is getting a little tough. Like you're going to need a little bit more improvement in the overall trend before I think you sink your teeth into something and get really excited. So I think the better way for this to play out is, yes, come down, maybe even bounce off 4,000 and then maybe come up, fail, come back and consolidate potentially between now and the end of the year, and then set itself up maybe for a move next year. But we have to be ready for this to not hold. All right. If this doesn't hold, then we need to be prepared for a much, much different environment than what we've been living through. And it's probably going to last a while. And you're not going to want to be a novice trading in this type of environment. All right. It's going to be much more difficult. And you're going to want to look for specifics in terms of trend and volatility to play in either direction. All right. So anyway, we'll get to that as time goes on. But for now, let's see if we can get any kind of a turn at the 4,000, 4,100 mark and see if there's not some kind of a tradable rally to set up. Let me know if you have any questions. Thanks.